Welcome to another S&P 500 analysis. Today is October 7, 2022. The S&P 500 started the week with a bounce off the new corrective low. Then on Friday, the S&P 500 sold off after the non-farm payroll report showing continuation of a strong job market. But even with a loss of more than 100 points on Friday, it's still able to end the week with a gain. Will the S&P 500 continue to move down, or was the Friday sell-off just a profit-taking move? In this S&P 500 analysis, we will review the market sentiment, market internals, the price action of the S&P 500, and the other major market indexes and see what is the market telling us. Stay tuned. If you like my videos and have not subscribed to this channel, click the subscribe and the notification icon, and you will be notified when I have posted new video. Like this video I have posted on Wednesday late evening to give you an update on what to monitor for the SPY in the remainder of the week. After the S&P 500 has gained more than 5% in the first 3 days of the week, it started to reverse after the latest jobless claim and the numerous Fed heads talking about continue the hike rate until it has reached a restricted rate level, which right now it appears to be between 4.25% to 4.75%. Then on Friday, when the latest non-farm payroll report came out and it showed the job market continued to be strong, the market sold off as its hope for a Fed pivot or a pause on the rate hike was dashed. This week was not much different than the prior weeks. The S&P 500 had a range of more than 200 points. After the drop on Thursday and Friday, the S&P 500 still ended up with a gain of 54.04 points for the week, or 1.51%. Also on this weekly chart for the S&P 500, we see there is an inverted weekly hammer candle with a low higher than the recent low, and it broke this 3 consecutive weeks of one-time framing down price pattern, but it still closed under the declining 10-week and the declining 40-week moving average. On the sentiment chart, the VIX is above 30 once again, and it closed on Friday at 31.36, slightly lower than last Friday's close. The put-call ratio did not move above 1 on Friday's sell-off. It closed at 0.97. The up-down volume ratio increased a bit on the negative side. It was 9-1 in favor of the down volume on Friday's sell-off. The daily advance decline also showed a broad market sell-off with 2,210 more declining issues than advancing issues. The number of stock make new 52-week low was relatively low until Friday, where it had 399 stock make new 52-week low versus only 18 stock make new 52-week high. And here's the tell: the New York Stock Exchange cumulative AD line put in a lower low, but the S&P 500 closed above the prior pivot low. This created a negative divergence and will likely get resolved with a lower low next week. We'll talk about this a little bit more in my S&P 500 Trade Watch video this Sunday. The Nasdaq lost almost 4% on Friday and lost 446 points or 3.88%. The up-down volume ratio was more than 10-1 in favor of down volume, and the daily advance decline also showed a broad market sell-off on Friday with 2,890 more declining stock than advancing stock. The number of new low also came up a bit on Friday. It had 397 stock make new 52-week low and 38 stock make new 52-week high. The Nasdaq cumulative AD line also put in a lower low, while the Nasdaq 100 did not close with a lower closing low. This had created a negative divergence between the cumulative AD line and the Nasdaq 100. Now let's take a look at the interest rate, US dollar, oil, gold, and silver and see what these markets are telling us. The 10-year yield continued to climb toward this 4.32%. This climb started before the release of the non-farm payroll numbers. The US dollar pulled back under 110 in the early part of the week, then it resumed its upward move and continue to watch the dollar move toward this 117 level. Crude oil continued to move higher from where it left off from last Friday. This is before the OPEC announced a cut of 2 million barrels a day. We'll likely see oil continue to move higher I'll be watching the 100 level first for the near term and then 110. Silver moved above this $20 zone and reached more than $21 an ounce before it pulled back to this $20 zone. So for next week, watch silver to see would it be able to bounce off from this current level and back up toward this 22 level. Otherwise, watch for silver to come back down and retest this $18 area. Gold also had a nice bounce off of this recent low near 1622. It has moved up above the 1700 and got near the 1740 level before it came back down to this low volume zone near 1700. Next week, we'll watch to see if it can bounce off this low volume zone and back up toward this high volume node near 1823. Otherwise, look for a possible move down to 1650, this low volume zone here. Now let's take a look at the indices, starting with the S&P 500. On this daily chart of the S&P 500, we see the S&P 500 gap above the upper range of the weekly move on Tuesday, and then put in an engulfing neutral day on Wednesday, and inside bearish day on Thursday, then a gap down, sell-off on Friday, and caused the S&P 500 to move back into the weekly expected move range and close inside the range. Next week's weekly expected upper range is between 3,780 to 3,761, and the lower range is between 3,518 and 3,490. For the upside scenario, we'll watch this gap here to see what will get filled next week. This is the Friday gap. The downside scenario will be move down to take out the September low and move toward the lower range of the weekly expected move, which is also in confluence with the 50% retracement level. Remember, there is a negative divergence between the AD line and the S&P 500, and the resolution for that divergence will likely be for the S&P 500 to move below the September low. The Nasdaq 100 moved back above the 11,500 and filled the gap near the 11,600, then sold off on the non-farm payroll news. The upside scenario for next week is the attempt to fill this Friday's gap, and the downside scenario is for the Nasdaq 100 to take out the September low and close with a lower low and move toward the 618 retracement level near 10,600. We'll have more detailed scenario in my Sunday video where I will discuss the QQQ. The Russell 2000 moved above the 1712 level and up near the 1780 before it retraced back below the 1712 level. For next week, the upside scenario is an attempt to move back up above the 1712 and to fill the Friday's gap near the 1760. The downside scenario is for it to continue to move down and take out the June low. That's near the 1640. The Dow Jones Transportation moved back above the 50% retracement plus more, and then it sold off along with the other indexes on Friday, but was able to hold above the 50% retracement near the 12,360. So for next week, the upside scenario is to move back up toward the 13,000 and 13,200 into this zone here. And for the downside scenario, dip back below the 50% retracement at 12,360 and proceed down toward the September low. The Dow Jones Industrial still finished in a bear market territory, even it did have a positive week. For next week, the upside scenario, look for the Friday's gap to get filled and get back above the 38.2 retracement level near 29,800. The downside scenario is to come down and retest the September low and put in a lower closing low. The New York Stock Exchange Composite Index chopped around the 38.2 retracement level near the 14,000 area. Next week, upside scenario is to get back above the 38.2 retracement level, and the downside scenario is to put in a close below the September low. In summary, we saw the market participant or continue to be fearful and risk off. We also saw the S&P 500 made a strong upward push at the beginning of the week before it was hammered back down, but still ended the week with a gain. The negative divergence between the cumulative AD line and the indexes is telling us a lower closing low is coming, and that low will likely be lower than the September low. Be reminded there is still an outstanding Globex low from the E-mini S&P 500 futures that need to be resolved, and that resolution will ultimately bring the S&P 500 to dip below the September low. And I will talk more about that in my Sunday Trade Watch video. So what do you think? A lower low is coming, or the September low is the low of the year? Post your thought in the comment section below. Be sure to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.